An RSI trader explains the RSI indicator theory. An RSI trader explains the RSI indicator theory. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TS RSI Pro traders. For RSI trading, our website is www.dayprotraders.com. The title of the video is An RSI Trader Explains the RSI Indicator Theory. All right? Now, one of the challenges that traders face when they are day trading or swing trading is how they can use the technical indicators such as the stochastic indicators, the MACD indicators, and the RSI indicator. What we have noticed is that traders very often do not know how to use their technical indicators. All right? In order to make excellent day trading or swing trading decisions, one should thoroughly master the technical indicators. All right? So if one wants to master the RSI indicator, we recommend to traders to go to www.dayprotrader.com or check DayProTraders YouTube channel, where we are posting tutorial about the RSI indicator. The RSI stands for the Relative Strength Index. The role of the RSI indicator is to compare the magnitude of recent gains to the magnitude of recent losses. So if the magnitude of recent losses are superior to the magnitude of recent gains, the RSI indicator will be below the level of 50. All right? On the other hand, when the magnitude of recent gains are superior to the magnitude of recent losses, the RSI indicator will be above the level of 50. So if one is using the RSI indicator, one should constantly pay attention to the level of 50. All right? Above 50 is bullish, below 50 is bearish. All right? But now it's one thing to know. This is about the theory of the RSI indicator. In this video, I want to explain to you the theory of the Relative Strength Index indicator, or the theory of the RSI indicator. All right? What I meant by explain to traders is that what does it mean in real trading, in practical terms, the theory of the RSI, the magnitude of recent gain superior to the magnitude of recent losses in trading. Practically, what is the meaning of that? And also the magnitude of recent losses superior to the magnitude of recent gain. What is the meaning of that? Or RSI above 50. Practically, when we are trading, what is the meaning to it? Or what is the equivalent to that theory? All right. So this is the purpose of this video, to explain to traders the theory of the Relative Strength Index indicator. It is a momentum indicator, all right? So first thing first, all right? So magnitude of recent gain superior to magnitude of recent losses, it means that the price is going up, All right, that's the first thing we want to know. It's going up, It's bullish. It's going up. We have more bullish candle than bearish candle. All right. Magnitude of recent losses superior to magnitude of recent gain mean that we have more bearish candles. Price is going down. But practically trading, in practical trading, all right, the magnitude of recent gain superior to the magnitude of recent losses means that the price is in a rising channel. This is impractical, all right? So now the theory stated that when the magnitude of recent gains is superior to the magnitude of recent losses, the RSI is above 50. Practically, it means that the price should be in a rising channel, displaying higher lows and higher highs. If the magnitude of recent gains, all right, is superior to the magnitude of recent losses, the price must display higher lows and higher highs. But in this case, our attention is on the high. We must see new higher high. All right? So if the RSI is above, okay, 50, the magnitude of recent gains is superior to the magnitude of recent losses, the strategy is very simple. So here you see the RSI went above 50, where my cursor is at this point in time, okay? So what we can do is to highlight, so it's now above 50. There was this high here, all right? So you see this high here. Magnitude of recent gains superior to magnitude of recent losses. It means that the price must display higher lows and higher highs. So because we are talking about bullish progression, our attention is on the high. So we will highlight here, we'll highlight this high. All right? So the trading strategy is that price break above the high, the previous high, the RSI is above the 50, magnitude of recent gains superior to the magnitude of recent losses, price breaks above the previous high, so we just draw this line here, this is the previous high, okay, price breaks above it. We'll use a top-down trading method to look for opportunity to buy above the previous high, all right, very simple, previous high. If the magnitude of recent gain, if the magnitude of recent losses is superior to the magnitude of recent gain, the RSI will be below the level of 50. All right, remember, the price should be in what? In a declining channel. In a downtrend, we are paying attention to the low. So it's below, the RSI is below 50. Magnitude of recent losses is superior to the magnitude of recent gain. We'll pay attention to the low. So we highlight the low, and we look for opportunity to sell below the low. Normal condition, how do we sell below the low? So we want the price to be below the low, breaks below, all right, and try to retest it. As the price tries to retest it, right here, we have a bearish trade set up. From here, we'll use a top-down trading method to enter the trade. Price goes down again and form a new lower low. We highlight that low again, and we wait for the price to, you see here, you see D below the blue line, the green candle chart is here, so they try to sell it here. We have only this red candle here. It didn't go down very much. By using a top-down trading method, we can trade this, and if the music has changed, we'll know that it's not going to go down very much. But if one does not know anything about a top-down trading method, one can get into trouble. I recommend to traders to watch the video that we call, okay, I will put the link below about multiple time frame trading method, okay? I'll put the link in the description section so you can click on it and watch that video about the multiple time frame trading method, okay? All right, it makes sense? So first thing first, all right, if the magnitude of recent gain is superior to the magnitude of recent losses, we have a bullish progression. Practically speaking, the price must be in a rising channel. That's the meaning of it. Recent gains superior to recent gains superior to the recent losses. The market pattern is what? Bullish. All right, get it right practically, okay? Magnitude of recent loss is superior to the magnitude of recent gain. The price should be in what? In a declining channel. Now, if the price is in a declining channel, what are we paying attention to? The low. The price must form new lower low. So if you have a low, we'll highlight it as I showed you already, and we'll implement a top-down trading method below that low. Break below, retest, turn around. Sometimes the price will continue to go down without pulling back. That's a different video that we record for traders about how to sell when the price is going down too fast and how to buy when the price is going up too fast. All right. In fact, this week I was having a discussion with a TST trader when I was explaining to him, okay, how we handled that. Okay. So this is a simple explanation of the theory of the relative strength index indicator. Magnitude of recent gains superior to the magnitude of recent losses. The RSI is above 50. Magnitude of recent losses superior to the magnitude of recent gain. The RSI is below 50. price must be in the declining channel, attention to the low. RSI above 50, price must be in a rising channel, and attention to the high. We want to trade the breakout, we highlight the previous high, and we use the top-down trading method to look for opportunity to buy above the previous high. It makes sense? It is also powerful. Next thing that you need to know, very important, that you will not see on YouTube, all right? It's the first time we are talking about this, all right? Magnitude of recent gain, all right, is superior to the magnitude of recent losses. Pay attention, because here you can see that the RSI went above 50 for the first time. Now, if the bullish momentum is increasing, you see that the RSI will continue to go up, which means the strength of the bullish momentum is getting strong. Even to the level of 70, the magnitude of recent gain is reaching the maximum level. But if the RSI is above 50, my friend, all right, and is rising, it means that the bullish momentum is becoming strong. Now, practically speaking, if the bullish momentum is becoming strong, you will also, apart from everything that I've said so far, sometimes you will see that the price will be on the upper side of the rising channel, which means the price will be rising above the median line of the channel. It's confirming to us that the bullish momentum is becoming very strong, and the price prefers the median line instead of the lower part of the rising channel. The opposite is also true in a downtrend. The RSI dip below 50, price in a declining channel. If the RSI continue to go down in a straight line like this, very often the price should be riding the lower part of the declining channel, because the strength or the speed of the bullish progression is increasing. Therefore, the price will be below the median line of the declining channel. So you won't have a chance to sell on the upper side of the declining channel if the bearish momentum is strong, but you will only have opportunity to sell on the edge of the median line because the bearish momentum is increasing. It makes sense? I have already explained to traders at www.dayprotrader.com and also at DayProTrader YouTube channel that the RSI indicator, the level of 50, all right, practically speaking, RSI above 50 correspond to the price going above the moving average 50. So that's why the TSTW24 traders do not use the RSI indicator, but we use instead the Bollinger Band 50 volatility 2, because price goes up. So here you see the RSI went above 50, yes or no, all right, and it stay above 50, all right, yes or no. Look, I have on my chart the moving average 50, and during that time the price was also above 50. So RSI above 50, practically the price should be above the moving average 50 on any time frame, daily chart, weekly chart, monthly chart, 15-minute chart. 80% of the time, RSI above 50, the price should be above the moving average 50, either exponential moving at 50 or simple moving at 50. You'll see that when the RSI is above 50, the price will go above a moving average 50. Here it is, you see here, RSI above 50, the price above 50. Here, look carefully here, on my chart, RSI below. You see the price was below 50 here. Are you following my drawing on the chart? So, all right. So here, you can see that the RSI was below 50. Where was the price? The price was below the red line. The red line is the moving average 50. All right? So this is another explanation for the RSI below 50. But when we are trading, why traders lose? Traders lose because we violate the market pattern on different time frames. The market patterns are the rising channel, the declining channel, and the horizontal channel. So moving average 50 is, in theory or in practical term, correspond to the moving average 50 on any time frame. Any time frame, all right? It makes sense? It makes sense? All right? It is also powerful. Now, the next thing that you need to understand, talking about the theory of the RSI indicator is what? is an oscillator. It's oscillating between the level of 70 overbought and the level of 30 oversold. But if you, here you can see that if I draw, okay, horizontal line in the zone of 70 here, all right, we have what? An horizontal channel around the RSI itself, all right? Level of 30 and level of, you see here, it's a level of 70, here the level of 30. In normal condition, the best time to use an oscillator, a momentum oscillator, like a CCI indicator, stochastic indicator, RSI indicator, or RSI oscillator, or stochastic oscillator, or CCI oscillator, is during what? Okay, the consolidation. So during the consolidation time, the price will be in what? In horizontal channel. All right? It makes sense? So here, I'll give you one example first. Price was in a rising channel, the theory, and the practical example of the RSI, and the RSI below 50, declining channel. There's one more, it's the horizontal channel. If the price is consolidating, all right? Hopefully I'll see one example here. When the price consolidating, there's a small example here. I'm on the 2-hour chart for the New Zealand dollar US dollar currency pair. All right, when the RSI, when the price is consolidating, when the market pattern is a balanced market pattern, is horizontal channel. Pay attention. When the RSI goes above 50, practically it means that the price is on the upper side of the horizontal channel. Are you with me? When the price is consolidating, the equivalent or the practical equivalent of RSI being above the level of 50 is that the price should be above the median line of the horizontal channel. All right? In practically, the price should be above. Here you can see that if you look carefully, look at this section here. The RSI was above 50, but the price was not yet above 50. You must wait because the price is consolidating, all right? But if you divide, okay, you may say, okay, this small channel, because it was consolidating between the smaller channel here, all right? Okay, so above 50 means that the price is above, okay, the median line of an horizontal channel. So here, if you consider this smaller channel, RSI was above 50, okay, meaning that the price was consolidating between these two levels here, and the price is above the median line of the horizontal channel. Here we have a bigger channel between this level and this level here. RSI above 50 is that the price is above the median line. On the other hand, if the price is consolidating and the RSI is below 50, it means that the price should be below the median line of the horizontal channel, practically speaking. All right? Practically. But sometimes you will see that there will be a divergence. You see here the RSI D below 50 here, but the price was above the bigger channel. But if you consider this top channel, the smaller channel, it makes sense. You see this smaller channel here. It makes sense to say that the RSI you see here is D below the 50, meaning that the price below this smaller median line here. It makes sense? So three things that the price is doing all the time, that's what we call the market stable data, something that remains intact on every time frame. The price sometimes is in a horizontal channel, sometimes is in a rising channel, sometimes in a declining channel. On every time frame you will see it. So what we say to traders, when you are trading, you want to ask yourself, what is the current market pattern on the setup time frame, on the signal time frame, and also on the entry time frame? You can do whatever you want to do, but do not violate the three market pattern. This is a quick explanation of the RSI indicator theory, or the explanation of the relative strength index. Practically speaking, what does it mean when we say that the magnitude of recent gain is superior to the magnitude of recent losses? It makes sense? It is also powerful. So we want to know the strategy that we can adopt if the price is in a rising channel, all right? Magnitude of recent gain is superior to the magnitude of recent losses, meaning that the price must display higher lows and higher high. Our attention is on the high. We'll highlight the high, and if the price break above the high, we use a top-down trading method to take the trade. It makes sense? Rising channel. I explained it already. If the RSI is below 50 and the price in a declining channel, our attention is on the low. We highlight the low, we use the top-down trading method, break below, retest, turn around. Use a top-down trading method to enter the trade. I'll put the link below about the multiple time frame trading method video in the description section. So check it out. Watch the full of that video so you may also understand what is a top-down trading method. It makes sense? All right? Sometimes the price is not in a rising channel, it's not also in a declining channel, but the price will be consolidating. We have a balanced market pattern or an horizontal channel. If the RSI is above 50, it means that the price is on the upper side of the horizontal channel. But remember, sometimes we have to consider the smaller channel instead of the bigger channel, as I show you here. RSI above 50, it means that the price is above the median line of a particular horizontal channel. Here, you see it was above 50, it was this smaller channel here. Below 50 means that the price is below 50 means that the price is below the median line of the current horizontal channel. You see here I have the smaller channel, but if you consider the bigger one here, you may see that the price is not below. If you consider the smaller one here, you see that it's below. Another thing that trader must know, talking about an RSI trader, explain the RSI indicator theory or the relative strength index indicator theory. Magnitude of recent gain above, magnitude of recent gain superior to the magnitude of recent losses. It means also, this is another explanation, practically speaking, that the price is in a bullish zone. Now, if the RSI is below 50, it means that the price is in a bearish zone. If you do not know what is a trading zone, go to www.stochasticmacd.com, click on Market Trading Zone at stochasticmacd.com. I'll put the link below, okay, also for you. Okay, let me write it there here so I don't forget, okay, in the description section. So check it out and know what is a trading zone. RSI above 50 is also, practically speaking, meaning that the price is in a bullish zone. Very important. If the price is in a bullish zone, the price might display higher lows and higher high. In a bullish zone, we pay attention to the high, and we want a breakout, and we use a top-down trading method to enter the trade. Again, RSI below 50, it means that the price is in a bearish zone. If you do not know what is a trading zone, bullish trading zone, bearish trading zone, go to stochasticmacd.com, click on trading zones. Okay, I'll put the link also in the description area for you. With this information, you have a bit of idea what is the meaning of the RSI indicator, because it says that it's a momentum oscillator that compares the magnitude of recent gain to the magnitude of recent losses. Practically speaking, this is the meaning of the theory of the relative strength index oscillator or relative strength index indicators, the RSI indicator. It makes sense? Another explanation, practically speaking, when the magnitude of recent gain is superior to the magnitude of recent losses, the price should break resistance levels. Now, note it down, very important. If the magnitude of recent gain is truly superior to the magnitude of recent losses, we highlight the resistance level. All right, so there was this resistance here, okay? So look here. There was previous resistance here. So resistance on the left-hand side should be taken out if the magnitude of recent gain is superior to the magnitude of recent losses. So you see here, price come near this resistance. You see the RSI was quite overbought. If the magnitude of recent gain is truly superior to the magnitude of recent losses, the price will continue to go up above the previous resistance level. All right? But if the magnitude of recent gain is superior to the magnitude of recent losses, but the price failed to go above, like you see here, it went above it, but it's coming down, it's the opposite, it will sell instead, because it failed to continue to go up, though the magnitude of recent gain is superior to the magnitude of recent losses. The price could not continue to go up and continue to go up. It came out of a rising channel, a violation of a market pattern we will sell instead. You see here, though the RSI, you see here in this section here, the RSI was still above 50, telling that the magnitude of recent gain is superior to the magnitude of recent losses, but the price is out of the rising channel. We will look for opportunity to sell instead. It makes sense? So magnitude of recent gain is superior to the magnitude of recent losses. It also means that the price should break resistance and find a support above the resistance. If it does not find a support above the previous resistance, it's capitulation. It probably will come out of the rising channel and we look for opportunity to sell instead. The opposite is also true, talking about the theory of the relative strength index oscillator. Magnitude of recent losses superior to the magnitude of recent gains, it means that, okay, the price should break below support levels, because magnitude of recent losses superior to the magnitude of recent gain means that the bear are dominating the market, therefore the support will be taken out. So here we are, the RSI is below 50, magnitude of recent losses superior to magnitude of recent gain. We highlight the support level. You remember again? Support should be taken out. So here we are. Look here. There is this support here. Magnitude of recent losses superior to the magnitude of recent gain. Here we were here. You see, we are below. We are below 50. But look, the price could not go below this support level. It breaks below it and it's going back above it. What does it mean? It means that it's a reversal. We look for opportunity to buy instead of selling. This is a true meaning of the oversold, okay, RSI indicator. The opposite here is a true overbought RSI indicator right here, because the price break a resistance level but could not continue to go up and return below the previous high. It's a capitulation. Here again we have a capitulation of the bear. Here we have a capitulation of the bulls. It makes sense? So magnitude of recent gain superior to the magnitude of recent losses, price should break resistance level. It makes sense? Magnitude of recent losses superior to the magnitude of recent gain, price should break below support levels, key support levels. If it breaks below a key support level but quickly return above it, it's a capitulation. We'll look for opportunity to buy instead. This is the end of this video about an RSI trader explain the RSI indicator theory. If you like this video, give us the thumbs up. If you dislike it, give us the thumbs down. If you truly love this video, share it on Google+, on Twitter, and also on Facebook. If you love all our videos, feel free to subscribe to our channel, the Day Pro Traders, YouTube channel. Okay, or you can also subscribe to our website. To summarize this video, practically speaking, when the RSI, when the magnitude of recent gain is superior to the magnitude of recent losses, the RSI is above 50. Practically speaking, the price should be above the moving average 50. Practically speaking, the price should be in a rising channel. If the RSI is above 50, it continues to rise, to go up, the price should be on the upper side of the rising channel. The opposite is also true. Magnitude of recent losses superior to the magnitude of recent gain, all right, the price should be in a declining channel. If the RSI is below 50 and the RSI continues to go down, the price should be riding the lower part of the declining channel, meaning that the bearish momentum is becoming very strong. RSI below 50 is also equivalent to the price below the moving average 50. When the RSI is above 50, very important, it also indicates to us that the price is in a bullish zone. If the RSI is below 50, it's also indicating to us that the price is in a bearish zone. If you do not know about the trading zone, go to stochasticmarket.com. Another explanation of the theory of the relative strength index indicator, a momentum indicator, when the RSI is above 50, we'll expect the price to break a previous resistance on the left-hand side. All right, very important. On the other hand, when the RSI is below 50, the magnitude of recent loss is superior to the magnitude of recent gain. The price should break the previous support level. Okay? It makes sense? It is also powerful. Thank you for watching, and we will speak to you very soon. We are the TS RSI Pro traders talking about an RSI trader explain the RSI indicator theory. Speak to you soon.